Hey guys, how are you? It's been a while since I posted a motoring vlog to the community and for the Market Sniper channel. So we've got a bit of a trading situation that's quite interesting. We've had quite a ascending bottom breakout on Bitcoin, and it then started to form a wedge, a rising wedge, and was going higher and higher, and subsequently overnight it even went a little bit melt up, which is the classic pop out the top. So in a wedge you get three kinds of things that happen. A rising wedge, this is why they're technically not reliable for trading directionally. They can sometimes just melt up and run. So in other words, a rising wedge can sometimes just go up instead of the expected collapse or fall or sell-off. It can do what's expected and do the traditional technical analysis view of a spike down after squeezing and rising up. And then option 3, which it often does in a practical sense, but no textbook ever seems to mention except the HVF methodology, you get a pop out the top. You keep squeezing, people are desperate to get in, it keeps going higher and validating them. Then everyone goes into a fear of missing out. All the last weak hands that have been watching it and wishing they were in early and aren't, arrive late to the party and give it a pop out the top. This then leaves very little money on the table or the sidelines to come in. Short-term money. There may well be longer-term money, and you get your sell-off. And that's what's happened with Bitcoin. Quite a big sell-off, proper spike down, and then everyone panics. As my favorite philosopher-in-chief, the great Iron Mike Tyson, once said, they all have a plan. When asked, he was asked about Bone Crusher Smith, who said, yeah, Bone Crusher Smith, the journalist, says, got a special plan for you, Mike. You know, he's worked you out, he's got a special plan. Mike Tyson famously responded, they all have a plan, and then I hit them. The concept behind that is many people in trading have a process or methodology that they're lightly adhering to, and then some nasty effects start to take place and the plan just goes out the window, and it's panic, fear, and emotional reactions and just survival. And you're either going to end up in a ring with Mike Tyson, or you got to start adhering to your process and your methodology. What do you do with a Bitcoin on the sell-off? Nothing. It was signaled, its price behavior, it was probably going to have a sell-off. It could have melted up as well, but it didn't give you that. You earn your money by the things you do and don't do and the quality of the decisions you make. That's trading. You don't earn your money by lugging cement bags. You don't earn your money by having a stiff back every night for carrying them, doing manual labor and other things. You think it's the big easy. It's a mental challenge. It's a challenge of how good you are in sticking and adhering to your methodology and accepting the outcome, even when that means a stop run. So a stop could be run on Bitcoin, and that setup has failed. And that's just the probability of outcome game, and trading is exactly that. A game of outcomes for which you have no control over the outcome. You only have control over how you elect to react to the outcome. And this is the mindset aspect. You've got to decide what kind of guy you are. Are you going to be panicking and running? If you've got in too big and you're watching that P&L and it's got emotional, you're not adhering to your money management standards, more likely that you're going to be panicked and running out of your methodology. Simple as that. You've turned up the volume too loud and now the ears are aching. You've got to pull the plug. So you've got to always stick consistently to a money management set of rules so that it never gets too emotional. And at the same time, you've got to stick to the methodology. And if you don't have sufficient a methodology, you need to develop one. And you need a real edge. And you need to understand that you have a real edge, and you need to have tested that edge. And you probably want it many years in different markets to be tested. In other words, it should be agnostic if it's a technical game that you're playing. Unfortunately, just about everybody's strategies that I see don't actually long run provide edges. And that's why we have the HVF method. It's taken me 26 years to get to this point, and most don't get there. Not that I'm special, others have found ways. It's not the only way to trade, it's not the only way to make money, but it needs to be a way that's emotionally comfortable for you to stick to. Far better than an absolute brilliant trading strategy is a good one that is one that you are capable of adhering to. A brilliant one that makes an unbelievable amount of money but has a 70% drawdown, and every time you would have panicked and sold, it's no good. It's no good at all. What you need is a good method that you're capable of adhering to. In other words, the emotional journey it gives you is such that you can bite your bottom lip and hold on. And if you can't, even on a good strategy that isn't over testing you on things like drawdown and how it works and number of winners and number of losers, you either need to work it yourself and become more emotionally robust, which is a mental and emotional development, or you need to find a methodology that is even less testing. My personal experience in teaching and delivering the HVF method is it's the most emotionally comfortable method that most people can adhere to. The reasons are the following. Our stops are very tight, so we're quickly wrong and taken out when we're inaccurate. When the actual setup triggers, we are abruptly and brutally taken away from our stop levels, and the trade moves quite quickly into a strong profit and generally remains there if it performs to target. That is an emotionally comfortable journey. Something that puts you in and out of profit half the time and then dips back in, and for which there is no substantial move away from your risk management point, is not going to be emotionally comfortable. Something that has a high level of drawdown is not going to generally be emotionally comfortable. Something that gives you a shed load of losers in a row before you eventually get one home run, it's not going to be emotionally comfortable. And if you don't go through all the losers and take every single trade and get grinded down, you won't take the one that pays for the rest. HVF method is none of these things. And the emotions and the psychology and your ability to understand and implement needs to be there, and your robustness to the system needs to be there. And this Bitcoin, straight away when the sells, everyone, what do I do? What do I do? You don't do anything. You need to know when the decision is no decision. You adhere to principle. You watch it fall. It hasn't run your stop level. You're not going to be shaken out. You sit and you relax and you leave the screens. Over watching, over fascination, that amplifies your emotional element and eventually gets you tinkering. And that's the key. So a couple of thoughts for you there with Bitcoin, courtesy of Iron Mike Tyson. You've either got to have a plan and make damn sure it's got an edge and you can stick to it. Otherwise, Big Mikey's going to beat you up and you're going to be emotionally responding and running in fear. Anyway, nice to check in with you guys and speak again soon. Those that want to find out more, get in touch on themarketsniper.com/contact us. Have a chat to see if crypto trading and even FX trading or any form of trading is suitable for you, and see what we've been able to achieve for others. And if not, just enjoy the clip. If you like it, share and give it a thumbs up, but if you don't. Speak to you all soon. Enjoy your weekends.